Good morning, everybody. I am just a regular guy. When I got on TikTok 4 years ago, it wasn't because I had dreams of being an influencer. I've heard this study or this thing that teachers in middle school and elementary school have asked their students, hey, what do you want to be when you grow up? And all the kids say, I want to be an influencer. I want to be a YouTuber, TikToker. That was never my goal. I did want to be a pro wrestler. I wanted to be a pro wrestler not only because I loved the business and the storylines and the drama and the action and all of that stuff. I also wanted to be a wrestler because I knew how it felt to meet the wrestlers that I idolized as a little kid. I went to my doctor's office once when I was little, and my doctor didn't look at all like Hulk Hogan except that he had the mustache. Like Hogan did. And I said, you kind of, with the mustache, you kind of look, that's my dishwasher in the background. You kind of look like Hogan. And he said, funny enough, we just ran into him at the airport. My kids, and we were coming back from a vacation, and here comes Hulk Hogan, and my kids lost their mind, and he couldn't have been nicer. And oh my God, my kids, they were so excited. And I was sitting there listening to this. I was probably like 8 and thinking like, wow. Imagine running into Hulk Hogan at the airport. Wow, what a feeling. I wish I could run into Hulk Hogan. And later on in life, when I met some of my favorite wrestlers at like autograph signings and whatever, that feeling was so exciting to me. So I wanted to do that as well. But I never intended to be like this influencer with 200,000 followers teaching. It just I kind of stumbled into it by accident because I had a couple friends, number one, who were saying like, teach me. And I thought, if I just make a video, put it on YouTube, then when someone asks me, I can share it with them. And then what ended up happening was, I felt like, well, that's not fair. Like I can't just have this video on here teaching people how to trade and invest, but only give it to my friends. I should share it with everybody. But how do I promote it? So I got on Instagram to promote it. And about a year in, wasn't working. I had like 180 followers, something very small like that. Not even 200 people were following me on Instagram. I had like 50 YouTube subscribers. And I was like, I think I'm done here. This was a fun idea, but it didn't work out. Nobody's watching my videos. No one's engaging. I'm going to stop. Until someone at my gym said, hey, why don't you get on TikTok? And I said like, TikTok, that's for kids, right? And he was like, no, not anymore. It's changed. Get on TikTok. And I was one of like, I think 4 or 5 content creators making finance videos in the beginning. There just weren't a lot of us. And I got like 1,000 subscribers or followers or whatever you want to call it in the first week. I think actually the number was like 420 and then 1,000 and then 2,000, 3,000, 5,000, 10,000, 30,000. And every time I hit one of these big milestones, I would have a panic attack because I was like, oh my God, this is more people coming to me. And even though I'm not giving financial advice, it definitely is helping people with money and teaching people. And if I give the wrong information, and I'm just a guy, I'm just a regular guy. I wanted to be a pro wrestler. I never went to college. Worked minimum wage jobs in the kitchen and the restaurant industry. I never thought that I would be like the guy running the most must-see finance TikTok account on all of TikTok and having these lives with people coming and bombarding me with questions about the markets every single day. I never thought that would happen to me. And I'm self-taught. I'm a regular guy. And so the responsibility now to provide all this information was very overwhelming. And the thing I wanted most to talk about before we go and look at a potential stock trade here is that when I first started trading, I kept it as simple as possible. I noticed watching these people on the news and hearing of family members who were talking to their stockbrokers, how overly complicated they made all of this stuff feel. So you felt like you had to hire them. You would look at it and go, well, I can't. I don't know what these guys are. They're throwing out terminology here I've never heard about. I don't know what I'm doing. I'm gonna hire this guy. I don't know what I'm doing. I'm gonna buy a stock trading course and they'll teach me and they'll show me. Because they would go on Instagram and they'd see the guy with the Lamborghini behind him and they would go, well, he has a Lamborghini and he says he trades stocks. I want a Lamborghini. I'm gonna buy his course. Really, the only person getting the Lamborghini at the end of the day is the guy selling the course. And I was like, man, this place is like rife with scammers and people just willing to take advantage of people to enrich themselves. And I was not okay with that. So I was like, man, someone should get on social media and someone should be the alternative to the course guy. And I think that person ended up becoming me, even though I wasn't really expecting it to. And Initially, I've said this before, I made my username Trade, Invest, Simplify because I trade stocks, I invest in stocks, and I live below my means. I'm a minimalist. Later on, someone came to me and said, your username is Trade, Invest, Simplify, and it makes sense because you simplify investing and trading. And I was like, I like that even better. But the whole thing with me was, let's not overcomplicate this. You know, investing shouldn't be complicated. Trading stocks shouldn't be complicated. When I first started, before I got on social media, I had like 2 indicators on my screen. I had Bollinger Bands and I had the relative strength index. That was it. I had read about them online. I started using them and I was like, oh, these work. And then I go on Instagram or I go on TikTok and I'd see these finance accounts going like, here's the stochastic moving average and this and that, and they'd throw all these confusing terminology at you and overwhelm you, make you feel like an idiot. And they'd look at all these indicators, and I'll pull it up on the screen in a second when we go into the room to look at a potential trade. Now, what ended up happening to me, I've been trading stocks for the last 13 years. And when I got on TikTok, I found it very hard to be fully on TikTok and fully trading stocks. I wanted to be on TikTok. That's where I wanted to be. That's where I wanted to be spending my time, helping people, teaching people. And my trades started to suffer. I started trading a little bit less, and I was like, man, if only I could get paid to make these TikTok videos, I could stop trading for a little bit so I could focus on this. And it didn't happen, it didn't happen, it didn't happen. And then finally, about 1.5 years ago, I started getting, maybe longer than that now, I started getting brand deals from companies. And they would email me and they'd say, hey, we want to hire you, we want you to make a video for us. And I'd be like, I don't feel so comfortable promoting your product. So I was turning down brand deals, which I think a lot of wannabe influencers or regular influencers would just say, screw it. I'm taking their money, I'm promoting their product, and if someone buys it and has a bad experience, too bad for them. And that's just not me. So I was being very selective in who I worked with, and in being selective, I would try to charge more per video. And it started to work for me, and I started making money on these brand deals, and I could trade a little bit less, and I could focus more on my community on TikTok, and I love it, but I stopped trading. And yesterday, I got a DM from someone on Instagram saying, you know, I'm a little bit older than you, I want to invest as much as possible, and I think I want some of that money to come from potential stock trades. Now, stock trading is really, really risky, and we all know this. But he was like, it seems so complicated and so confusing. And it kind of, I went on Thinkorswim, which is what I use to trade. And I took some screenshots and I drew on the screen a little bit. And I sent him a couple DMs back. And I was like, it's really not as complicated as you think. The most important thing is you know where you're going to cut your loss. That's the most important thing. If the stock is $4.30 and you buy 1,000 shares, it costs you $4,300. If it drops 10 cents, so if it goes from 430 to 420, you just lost $100. If it goes all the way down to $4 per share, you've lost $300. If it goes to 390, 380, 370, if the stock just keeps losing value, you don't want that to happen. Number one thing, how much money are you comfortable losing? Maybe it's 3%, maybe it's 5%, maybe it's 7%, maybe it's 10%. It's different for everybody based on their own risk tolerance. The last thing you want is to tie up your money in a stock that's now down 40%, because you're probably not going to take that loss at 40%. You're probably just going to say, well, I'll wait for it to come back. You'll do the one thing we all say not to do, which is don't turn a losing trade into an investment. Don't just say, well, it's not, you know, it's down too much, I'm not going to take the loss. I'll hold it. It'll come back. It'll come back later. And you end up holding that loser stock for 3 years, 4 years. But the other thing that you don't get is access to that money anymore. So yeah, it says you have a 30 or 40% loss, but you really have a 100% loss because you don't have access to that money anymore to continue trading. So it's very important, especially if you're on a limited amount of money or a limited budget for trading, to say, I'm out, I'm cutting my losses. That's the smart move. Most people don't want to admit it. Most people, when it comes to trading, they don't want to be wrong. They researched it, they studied the charts, they looked at the news, they made a decision. They're right, they have to be right. You know, they look at it like, I cannot be wrong on this, I have to be right. That's the loss. The ego is what's causing you to lose money. The smart trader doesn't care about, I have to be right. The smart trader realizes that they have to be right too when it comes to conserving their money. they have to say, uh-oh, I'm out. And then just like a Band-Aid, yank it off, move on, find a different stock to trade. So, but in DMing with this guy, I started thinking, hey, I kind of like this. I miss this. It's been over a year since I've been like actively trading stocks. And I really do like the simplified approach. It really is as simple as you want it to be. All these indicators and all these charts and patterns, I never used them, right? I said in the beginning of the video, I'm just a regular guy. I'm just a regular guy, self-taught. I found a method that worked for me and I stuck with it. I don't want to overcomplicate things for you or for me. It doesn't have to be like that. So on my phone right now, which has the good 4K camera, we're going to move into my bedroom / office now, and I'm going to do the little like camera on the computer, which is less quality. So it's going to be a little bit less quality, but that doesn't matter. What you're here for is this trade that we're going to potentially make, and I'll try to keep it brief, do a little bit of a walkthrough as to what I consider when I'm thinking about making a trade. And if you're not interested in trading, and this is where you want to stop watching the video, thanks so much. Please hit the bell, the follow, the subscribe, whatever buttons you got to hit here on YouTube, and thanks for watching. If you are interested in trading and you do want to see my process, my stripped down, very simple, basic process, come with me. Okay, so here we are. We're at the screen right now. Maybe not the best audio, maybe not the best video, but none of that matters. What we're looking at here is a chart, and you can see that we are looking here today at Peloton. Now, is Peloton a great investment? No. Is it a great company? Probably not. The stock is loaded with issues, decreasing revenues, blah, blah, blah. But as a stock trade, you can see just on a 20-day chart, there's a lot of volatility here. So the first thing I notice when I look at the chart is 1, 2, 3 times. So technically what we've got here is a triple bottom. And this is showing me really strong support. Every time that this stock gets into the $4.30 range, here it gets to 420, but whatever, 430, 420, 430 again, it's roughly holding support at the same level. Now, I could set an alert by right-clicking on the screen, going to add drawing, or I'm sorry, create an alert. And I could create an alert that says when the stock is at or below, because it's already at or above, but when it's at or below $4.29 or $4.30, alert me. And you can see this is what it'll look like. But I'm trying to make a trade here. Now, I don't know if I set this thing at 430, what could happen? It could hit 430 and immediately rocket. So what I'm going to do is I'm going to set my alert a little bit higher than the target so I can start watching it. So I'll get an alert that says, hey, basically what it's saying is it's close. You wanted it at 430. It's at 435, so it's getting there. So you need to start paying attention. So I set my alert at 435, which is just slightly above the support line here, 430. This is what we're paying attention to. Key thing here, if the stock hits 430 and then trades sideways like it does here or immediately turns around, we've got a potential trade. If it breaks the support at 430 and starts going lower, we're not going to make the trade anymore. And if we buy the stock at 430 and we hold it and it starts dropping, we need to start thinking about where we want to cut and take a loss. How much money are you willing to lose? For me, I'd be willing to lose maybe $100 on the trade, assuming I'm buying 1,000 shares, which would cost me $4,300. If it drops to 420, I'm taking my 10% loss. I'm losing $100. I'm moving on. So I'm giving myself a little bit of leeway here on the stock for me to be wrong. It doesn't have to be a guarantee. Nothing is set in stone here. It doesn't have to be, I'll buy it at exactly 420 or 430, and it has to stay at 430, and it can't go below. Relax. It can go below, but not too far below, because then we start losing a lot of money. So we need to have a number in our head where we hit that number, and I say, no, I'm out. For me, it would be around $4.20, 10-cent drop. For someone else, they might say, I'm comfortable risking $150. So they would do $4.15, something like that. Not me. Everyone's different. So we have the loss now factored in. We know where we're taking our loss. The next thing that we need to consider is, when do we buy the stock? We've got a couple options. As soon as it hits support, we could buy. However, here it looks pretty volatile, but what happens if the stock just trades sideways for 3 weeks and doesn't move? So one option is, yep, it hit 430, I'm in. The other option is, I'm going to wait for the stock to turn around like it does here, right? See, it hits this level, It slowly starts to move up. This is one day, but it could be over the course of days. It could be over the course of weeks. Nobody knows. You could say, all right, once it crosses this green line in the middle or blue or whatever color it is, this is the 20-day moving average. This is resistance. The red line is resistance. The purple line is support. The middle line is the 20-day moving average. And we could load this screen up with indicators. 50 days, 200 days. If it crosses this, if it crosses that. We're stripping this bare bones here because this is how I used to trade for the last 13 years until I got on TikTok and people started saying, well, can you explain the 50-day? Can you explain the golden cross? Can you explain this? Can you explain that? And then we would cover everything because, hey, it's good to learn these things. It's good to know these things. But at the end of the day, you find what works for you. And for me, it's the most basic thing possible. Look, I'll show you. Look at all these studies. Look at all these studies. Look at all these different studies that are on the screen. Well, you can't see them now because my head is blocking them. But look at all these momentum things. Look at all these studies. It's crazy. It's crazy the amount of studies or indicators that there are out there, and patterns too. There's the head and shoulders and reverse and cup and handle and reverse cup and handle. I've got all kinds of different patterns that we could look at, but I've never looked at them. For me, it's momentum, it's volume, that's it. So we've got a stock here. Now we know where we're going to take our loss. And for me, I'm going to buy when it crosses this 20-day moving average. And the volume is strong. So this here is volume. And you can see that like for here, for example, here where the volume is, it's kind of low. And you can see here it's a little higher and here it's way higher. I think the volume goes up to about here. Really strong day. So we're going to look for an uptick in buying volume. And that's going to be when we consider making our trade. If we get a breakout, like you can see here, that little green arrow, it's a breakout to the upside. That's a strong bullish signal. The other thing that I like to do is I like to look at when I'm in the moment. So once I make the trade, I'm going to switch over and I'm going to go to the 1-day 5-minute chart. And I'm choosing 5 minutes because I want to see sustained volume. I don't want to see a 1-minute chart like this. Where's the 1 day 1 minute? Not enough for me. I want to see sustained momentum for minutes and minutes and minutes, not just one rich buyer who came in and bought 30,000 shares and then walked away. I want to say, oh, there's real momentum here behind the stock. So that's why I picked 5 minute. Now the next thing we're going to do, now that we've picked when we're buying the stock, so let's say we get it at 435, which would be around, I think it would be around here. So we buy the stock at 435. Now, where do we sell it? The thing that I always say is so important is we're not in trading to make all of the money. We're just here to make some of it. So what we're going to do is we're going to use something called Fibonacci retracements to give us an idea of where the stock could go. And the most important thing to understand is when it comes to all these charts and these things on the screen is technical analysis isn't a guarantee. It's just an indicator. It's just to say, hey, this is what it could do. So you, as the trader, have an idea on what you could make. No guarantees. So we're going to right-click at the top of the screen where it says 574 because that's the high. We're going to go to Add Drawing, and we're going to go down here to this weird, it looks like a percentage sign. See it? It says Fibonacci retracements. And we're going to, now I'm not clicking on anything yet. I'm just holding the mouse. We're going to draw all the way to the bottom at the low. So we're basically connecting the most recent high to the most recent low. Then you click and it sets it. Now it moves. Now it's set in stone. Now all we have here are potential price targets for the stock. 456, 479. And we can open up a calculator here. You can see I had it already because I was doing this for that guy who was messaging me. 456. And we say, well, we bought it at 435. That's 21-cent move. And if we're buying 1,000 shares, that's a $210 profit. Don't concern yourself with making all the money. Don't look at this and go, wow, if it could go. If is the worst thing you can do when it comes to trade. If is what gets people hurt. What we want to do is have reasonable price targets. And these things can change. We're going to be looking at several different factors as a trader when it comes to taking profits. For starters, we want to see that that volume is remaining strong. If the volume starts getting weaker and weaker, people are losing interest, people are taking profits, people are walking away, we consider locking in our profits. The second thing we want to look at is this, the relative strength index. Look what happens every time the stock gets overbought. See, it gets overbought here and it pulls back a little bit. It's not very overbought, but it's a little overbought and it pulls back a little. Then look at this, big surge in volume, and what happens? Overbought again. And very slowly over time it starts decreasing, decreasing, decreasing. And look what happens when it gets oversold. It starts to move back up again. Again, not guarantees, just indicators. So what we're noticing now is, hey, it's oversold again, or overbought again, rather. The stock could start dropping. Now, we've already seen support at 430 3 times. Maybe it gets to 430, maybe it doesn't, but we're going to be keeping an eye on relative strength index on the way down for our time to potentially buy the stock, and on the way up to consider taking profits. So if we buy the stock at 435 and it gets to 440, which is right here, but the stock is overbought, we take our profits a little early, because the last thing we want is this thing to reverse course and our little teeny gain becomes a big loss. The smartest move is knowing when to get out of a trade that is no longer working. Maybe the volume is getting weak, maybe it's overbought already, you don't know. Now, alternatively, we have 456 as a potential price target for us. But what happens if the stock isn't overbought? What happens if it's in this range, indicates that it's not yet hit overbought territory, and the volume is really, really strong? Then we say, okay, it's going to blow past our first price target. Maybe it gets to 479. So 479 minus 435, that's a 44-cent move. Again, on 1,000 shares, you've just made 440 bucks, assuming that it hits this level. It might get overbought here. It might have weak volume and just taper off here. A lot to pay attention to. But big picture, this is way easier than having 200-day moving average and a 50-day moving average and looking at all the patterns and looking at all the indicators. So it sounds overly simple, right? If you buy it at 430 or 435 and it drops 10 cents, you cut your loss, you move on. If it doesn't and it trades sideways for a while, maybe you say, hey, this stock is moving sideways. I'm going to get out of this trade. Maybe I break even. Maybe I take a small loss. And the third option is you buy it and it rips. It goes up. Maybe it goes to your first price target. Maybe it blows past and goes to the second. We don't know where it goes. I would caution from looking at these very high numbers, because the first thing new traders do is they go, wow, 573 and I bought it at 435. Oh my God, $1,300, almost $1,400. If I buy it at 430 and it retraces, that's where this comes from, it retraces all the way up to its previous high, $1,400, I could make almost $1,400. That's really, really dangerous as a stock trader. This is hard to do, and it doesn't happen all the time. As a trader, like I said, the goal is to make some of the money, not all of it. All right, I'm talking too much. Thanks for watching. Hit the subscribe if you haven't yet done so. See you later. Bye, everyone.